What is good, YouTube? Chan FX here. Hey man, listen, first of all, I want to wish you a very happy new year. It's my prayer that whatever your New Year's resolution is comes to pass. May this year be that breakthrough year or that turnaround year for you who are trying to achieve consistency in trading. And not just trading alone, but all other aspects of your life, especially your spiritual life. Put God first in everything you do. Make Him the center in everything you do. Let your life revolve around Him and you achieve whatever you want in this life. I also want to thank you all for your support. It's part of my New Year's resolution to be consistent for you when it comes to putting out content. For me, this year I started very well in terms of trading because I was able to catch over 500 pips in my first trade of the year, even though I took the trade on the 31st of December 2024, but then my take profit was hit on the 3rd of January 2025, So for me, I can say my year has started very well in terms of trading. But it's not about how you start, it's about how you finish. That's the most important thing. So we are not about to get comfortable. And like I always say, if you're interested in how I was able to catch over 500 pips in my first trade of the year, make sure you stick around to watch this video to the end. Also, if you're interested in catching moves like this on your own, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship. Just DM me on Instagram at CharonFX. If you also haven't yet subscribed to this channel, like I said, this year, I'm going to be very consistent. So you want to be a part of the family. So make sure you hit that subscribe button to be a part of the family. Also like this video. Also drop a comment down below. With that being said, let's just get to business. Alright, starting from the daily time frame on gold. What was the first thing I did? The first thing I did was to identify the trend of the market. Yeah. And looking at our charts, what trend are we in? We're in an uptrend. Clear as day, you're in an uptrend. Now, after I've identified the trend of the market, what was the next thing I did? The next thing I did was to identify our market structures. So now let's get into the charts and let's identify our market structures together. So now starting from here, what the price created here, price created what? A higher low. After price created a higher low, what did it do next? It went back up to create what? A higher high, came back down to create what? A low, came back up to create what? A high, came back down to create what? A higher low. After this higher low was created, what the price do next? It went back up to create a higher high. Now, someone may ask, why didn't I consider this structure over here as a higher low? I didn't consider it because this structure never led to the formation of a new or higher high. It was this structure over here that led to the formation of what? This new higher high. That's why this becomes what? A higher low, not this structure. After price created this higher high, what did it do next? It created what? A new higher low. Why is this our new higher low? Because this higher low is higher than that of what this previous higher low. So now this becomes our new higher low. After this higher low was created, what the price do next? Price went back up to create a new higher high. Why is this structure our new higher high? Because this high is higher than that of what this high. So now this becomes our new higher high. After this higher high was created, what the price do next? Price came back down to create what? A higher low. Yeah. Why is this a higher low? Because this higher low is higher than that of what its previous higher low. After this higher low was created, what the price do next? Price went back up to create what? A new higher high. Yeah. Why is this our new higher high? Because this high is higher than that of what its previous higher high. So at this point, realize the price was creating a series of what? Higher lows and higher highs. So at this point, we can say price was giving us what? Bullish market structures. So after price created this higher high, what did it do next? It dropped back down to create what? A lower low. Why is this a lower low? Because this low broke below this previous higher low. So now this becomes our new lower low. After price created this lower low, what can we say? We can say that price has shifted from bullish market structures to bearish market structures because price didn't continue creating higher lows again, but then it created what? A lower low. So at this point, price is no longer what? In a bullish market structure. Now price has shifted from bullish market structures to a bearish market structure just because price created this lower low. So now you realize that price was trading between what? This higher high and this what? Lower low, isn't it? So after we've identified our trend and our market structures, what was the next thing I did? The next thing I did was to identify my key levels. And since we are now in a bearish market structure, what key levels am I looking for? I'm looking for what? Support to become resistance. That's what we are looking for. Yeah. Because when price is in a bearish market structure, let's say higher high, higher low, higher low, higher high, lower low. What are we expecting price to do? We are expecting price to retest this previous higher low as a what? As a resistance. Mind you, this higher low is also serving as a what? As a support. So we're expecting price to retest it as a what? As a resistance. And so we can continue by creating a new lower high, lower low, lower high, lower low. This is what we are expecting. One price is giving us what? Bearish market structures, isn't it? So after we've identified our market structures and we realize that price has shifted from bullish market structures to bearish market structures, the key level we identified was their support. So what we're expecting price to do after creating this lower low was we're expecting price to retest this lower low as a resistance. Yeah. Then continue back down. That's what we're expecting price to do. So the key level I identified was this previous higher low, which is also a support. So what are we waiting for? We are waiting for support to become resistance, so we can continue back down. So after I've identified my key level, the next thing I do is to drop down to my 4H time frame. So now let's drop down to our 4H time frame. Alright, so now coming down to our H4 time frame, what was the first thing I did? So now the first thing I did was to identify what our H4 market structures. Now let's all take a look within this box, within this range. What do we realize? We realize that within this range, price was forming a series of lower highs and lower lows, isn't it? That's all I did. So after I identified my H4 market structures, I realized that this was the last lower high and this was the last lower low price created. So after I've identified my H4 market structures, the next thing I'm expecting price to do is to break below our key level, which is this support, which is this line over here. Mind you, on the daily time frame, it's our support level. So I'm expecting price to break below it and retest it as a resistance. Now after it retests it as a resistance, I will find my entry over here. Then I'll short the market to the downside. But is that what price did? No, that's not what price did. So what did price do? We realized that anytime price broke below our key level, it managed to break above it. Yeah. Now it came back, broke below it again. It broke above it again. And what did it do next? It consolidated for some time. And it came back to retest it. So now after price retested it, what did I see? I saw this rejection, this bearish rejection. At this point, price failed to break below it again, but that it retested it. When it retested it, it rejected the key level. It rejected our support level. So after I saw this rejection, what did I do? The next thing I did was to drop down to my H1 time frame. Now someone might ask, why is it that our daily time frame was bearish? Our H4 time frame is also bearish, but I decided to buy. This is where we go down to our H1 time frame. So I show you why I decided to buy instead of selling. So now let's drop down to our H1 time frame. Alright, so now coming down to our H1 time frame, there's a box I drew around our rejection here. So let's all pay attention within this box, So now when I came down to our H1 time frame, what did I realize? I realized that when price broke below our key level, it went back up and broke above it. Now, after it broke above it, what did it do next? It came back to retest it. You can see that price came back to retest our key level once again. Now, after it retested, it pushed back up. When it retested and it pushed back up, I realized it formed a reversal chart pattern, So looking at it very well, looking at this structure very well, what alphabet does this structure look like? It looks like a W, isn't it? Now, in trading, we have what we call the chart patterns. We have what we call the reversal chart patterns. And any structure that looks like a W is more likely of a reversal chart pattern. But not only did they create a W, it also created it on our key level. This reversal chart pattern or this W happened on a key level. So after it created this W, what did I wait for? I waited for price to break above the neckline of our chart pattern. That's what I waited for price to do. And when price was able to break the neckline of the chart pattern with this bullish momentum candlestick, I knew it was time. I knew price was about to rally up. That's when I went in for buys, placed my stop loss right below our key level and my take profit to 2664. That's why I placed my take profit. You get me? As simple as that. As simple as that. So now let me go over. When I came down to the H1 time frame, what did I realize? I realized after price broke below our key level, it broke above it again. When it broke above it, what did it do? It came back to retest it as a support. Now, when it retested it as a support, it pushed back up. When it pushed back up, I realized that it didn't just push back up, but then it also created a reversal chart pattern. So after price created this chart pattern, what did I wait for? I waited for price to close above the neckline with this bullish momentum candlestick. So after price managed to do that, all I did was to go in for buys, place my stop loss right below our key level, and my take profit to 2664, giving me a risk to reward of 1:4.49, risking 110 pips or 112 pips to make for 500 pips. As simple as that. As simple as that. In case you didn't understand anything I did, go back and rewatch the video over and over again. Like I said earlier on, if you really want to be able to catch moves like this, just DM me on Instagram to get yourself enrolled in my one-on-one mentorship. Yeah. If you also haven't yet subscribed to this channel, make sure you hit that subscribe button, make sure you hit that like button, and make sure to drop a comment down below. With that being said, I'll see you in the next video. Ciao and FX. Peace. I'm out.